Good afternoon and welcome to the Blue Line Metals Edge here for Monday, November 29th. I'm Philip Strebel, Chief Market Strategist at Blue Line Futures. Getting into the wood here today right away and looking at some of these markets. Remember, today is basically the last day you want to be in December metals. You really want to roll out. You want to be February or April on gold. You want to be March on silver. You want to be March on the copper contract. Also January on platinum, March on palladium. So those are all your front months there. Don't get caught holding it unless you want to take delivery, and make sure you express that to your FCM. Looking at the markets on gold, I did write an article. It's on Kitco, and I'm one of the contributors there. I wrote this on Wednesday going into the holiday weekend. A lot of people reached out as a result of it, and I based the strategy on $25,000. That's usually an average starting size account for people. It's going to build 4 micro 10-ounce April gold contracts. You're going to buy 2 at 1780, 2 at 1725, stop loss at 1665. It's going to risk $3,500. And what we're looking at is targeting into next year. We believe that if we could recapture, on a deflationary theme coming into the first quarter, we're going to start to see a peak in U.S. equities, a flight back into safety. That's where gold and silver can really take off back to the upside. I'm really optimistic on silver. I think that just driving from Florida to Chicago and back over the course of the last week, I saw way more solar panels than I have in previous years. I've seen just farmland converted over into solar power fields with those solar panels. So I really think that, and especially if you do get any kind of uptick in this latest COVID, this new variant they're talking about, you'll see some of those mine production really come off. There'll be another physical squeeze on on copper, on silver. And one of the markets to look at when you have a shutdown of borders is the lumber market. We get a lot of lumber, from Canada, and that's already about lock limit up here today. So, gold will end up buying right around this level, 1780, 1725. Our stop loss will go at 1665. So you can always adjust the stop based upon, what your positioning, what your thoughts are. Someone who has, $100,000 account, we wouldn't put a stop loss probably in there at all at the moment because you'd be able to ride it out a lot more. Looking at silver, again, on silver, I think you want to be farther out. You want to look at, March is obviously the front month, but start looking at July and even December of 2022 based upon liquidity. Copper's another one. Pushing on back up here, trading back into this range. It got really close to a breakout. That was on Friday. And then this news of this new variant, it really derailed some of these markets that were looking really good. Like copper, like I said, looks really good. Looked like it was going to break out to the upside. We almost had to jump in there. If today would have been this extension upwards, we'd probably be looking at buying it, putting a stop loss right at 439. So crude oil was the one that really got damaged. And some of the notes I have from, over the weekend, Friday the volume was down 49% versus the 1 month average. So more than half the participants weren't there. And the participants that were active in the market were mainly the algo traders. So when you get, the way the algo traders work is they'll set a set of parameters, based upon some technical indicators. And once those are triggered, they'll initiate sells and they'll continue to add some arbitrary number. Every 50 cents down, they'll trigger another sell stop. They'll flip their buy stop to add to that quantity, and they'll give up no more than a certain percentage of the maximum open profit. So it might be 10%, 20%, 30%. They can set it to whatever they want. But, I see some of my, extended family members that are traders, they use that type of system. A couple things. I think that really this latest COVID and President Biden was talking about it. I really think that this is just a big scarecrow. They're taking the necessary steps, but I just don't think that we're going to see anything too dramatic, especially not on the, you might see more cases, but it's going to be mainly targeting like the unvaccinated countries, ones where there's a lot more unvaccinated people. And then looking at oil, pulled out some of the reports, and there were a few big reports that came out today. This one is JP Morgan's report. A lot of people are hearing about it on TV, and basically what they're talking about is they think that OPEC, as a result of this, is going to do a 3-month pause on their output. They talked about, hey, we're going to increase production for 400,000 barrels per day. They think that they're going to curb that. It's not going to happen. That's JP Morgan. And they really think that they expect oil to overshoot to $125 a barrel in 2022 and $150 a barrel in 2023. So I thought that was pretty amazing report. We're going to have to hold on to this one a while. This is Goldman Sachs report. They came out, they talked about the new COVID variant, how it's going to negatively impact demand on oil. And they said that the sell-off was exacerbated by unusually low trading activity on Black Friday. And they talk about similar moves, and I pulled up all these dates. You go to 2018, Black Friday, oil sold off $5. It's a lot of it is because of the fact that there's just no trading whatsoever. And they also put that the market is pricing in 400,000 barrels per day negative demand hit over the next 3 months. They think that, and it's also pricing in at these levels that OPEC has no response to it whatsoever. And to put it into context, they said that global oil demand fell by 200,000 barrels from the peak of last winter's COVID wave. So they just blew a gasket on this one and just really, really whacked oil. They think that it's going to be twice as worse as the Delta variant, twice as worse as the initial COVID response coming into, the end of the year last year, and that they really think that, again, they believe that OPEC could freeze its production for 3 months and you'd see oil prices get back to $85. So, and they said that the outbreak so far has been incurred in the low vaccination rate countries. So these are just some of the reports. Merrill Lynch has a similar one on it, talking about, they think that the supply chain bottlenecks could increase as a result of people are not going to go out in public. They're just going to continue to order stuff. You're going to see slower growth and higher inflation. And the higher inflation seems to correspond also with seasonal tendencies. And I outlined there's a number, when you go into December, you're going to have a number of seasonals, like December 6th, buy lean hogs, buy cotton, buy RBOB, buy live cattle, buy feeder cattle, buy sugar, buy crude oil, platinum, gold. All these come up in December as seasonal strategies. If you shoot me an email, I'll tell you, the details on all these. So, I got to say, you got to really keep calm on some of these market moves like this, and really reassess your strategy. If you do want to stop on something like oil, in order for it to break the longer term trend, although this doesn't look so optimistic on the chart, what you could do is you could flip the chart from a daily to a monthly, and then you look at this 2 months ago. If we break below 65.96 on a closing basis, I think you'd have a trend reversal on oil, and oil prices can continue to go down to $60. So if you want to stop loss, that's really where I would place it, just below that low. And I would use that kind of strategy on a number of different markets. You could see on gold, we would have that stop down at that 1665. On silver, that big panic washout right here, 21.26, we'd most likely have a stop down in the 20s as a long-term, trade strategy. So, I just want to give you guys some ideas on some things we're looking at. And then also, we'll get a little bit more detailed on the metals here, but a lot of concern, a lot of reach out on crude oil futures over the weekend. So I just want to hammer that out. Again, remember, futures option trading does involve risk of loss, may not be suitable to all investors. So good luck, good trading.